Do you dream of financial freedom? Do you wish your money could work harder for you? It's time to stop dreaming and start investing. This is your guide to understanding the exciting world of ETFs, index funds, and mutual funds. We're going to break down these investment vehicles in a way that's easy to understand and even easier to act on. Don't forget to check out the other parts of this series to become a true investing pro. But remember, this is just the beginning of your journey to financial empowerment. Let's dive in. Welcome to the wonderful world of ETFs, where investing becomes both exciting and accessible. ETFs, or exchange-traded funds, are like baskets of stocks. Imagine having a basket that contains shares from multiple companies, all bundled together. They let you invest in a variety of companies with just one purchase. This means you can diversify your investment portfolio without having to buy each stock individually. Imagine owning a tiny piece of hundreds of companies all at once. This not only spreads your risk, but also opens up opportunities across different sectors. That's the power of ETFs. They offer a simple way to gain exposure to a broad market or specific industry. They trade on stock exchanges, just like individual stocks. This means you can buy and sell them throughout the trading day, taking advantage of market movements. Unlike mutual funds, which are priced at the end of the day, ETFs offer real-time pricing. ETFs are known for their flexibility and low costs. They often have lower expense ratios compared to mutual funds, making them a cost-effective choice for many investors. They're a great option for both beginner and seasoned investors. Whether you're just starting out or looking to diversify an existing portfolio, ETFs can be a valuable tool. Whether you're interested in tech giants or renewable energy, there's an ETF out there for you. There are ETFs for almost every sector and investment theme you can think of. Ready to explore the world of ETFs? The possibilities are endless, and the potential for growth is significant. Stay tuned, because next up, we're diving into the world of index funds. We'll explore how they work and why they might be a good fit for your investment strategy. Index funds, your ticket to steady growth. Imagine a world where your investments grow steadily over time, without the need for constant monitoring or complex strategies. That's the promise of index funds. Index funds are like ETFs, but with a twist. While both are designed to track the performance of a specific market index funds are often more straightforward and easier to manage. They are designed to replicate the performance of a particular index, providing a simple and effective way to invest in the market. They aim to track a specific market index, such as the S&P 500. This index includes 500 of the largest companies in the US, offering a broad snapshot of the market's performance. By investing in an index fund that tracks the S&P 500, you are essentially investing in a piece of each of these companies. This means that when the index goes up, your investment goes up too. It's a simple yet powerful way to grow your wealth over time. The beauty of index funds lies in their ability to mirror the market's performance, providing steady growth with minimal effort. Index funds are known for their simplicity and low fees, making them a favorite among investors seeking steady, long-term growth. The low fees are a significant advantage, as they allow more of your money to stay invested and grow over time. This cost efficiency is one of the key reasons why index funds are so popular. Think of index funds as autopilot for your investments. Once you set up your investment, there's no need for constant adjustments or active management. The fund automatically adjusts to match the performance of the index, allowing you to sit back and watch your investment grow. They offer a hands-off approach while still providing exposure to a diversified portfolio. Diversification is a crucial aspect of investing, as it helps spread risk across different assets. With index funds, you get instant diversification, reducing the impact of any single investment's poor performance on your overall portfolio. Whether you're just starting or a seasoned investor, index funds are a solid choice. They provide a reliable and straightforward way to build wealth over time. But wait, there's more. Index funds are not just for beginners. They are also a valuable tool for experienced investors looking to maintain a balanced and diversified portfolio. Let's uncover the world of mutual funds and how they can help you achieve your financial goals. Mutual funds offer another avenue for diversification and growth, with professional management and a wide range of investment options. Stay tuned as we explore how mutual funds can complement your investment strategy and help you reach your financial objectives. Mutual funds. Let the experts handle it. Mutual funds are another way to diversify your investments. They pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. The fund is managed by a professional fund manager who makes investment decisions on behalf of the investors. Mutual funds offer a wide range of investment options, from conservative to aggressive. They're a great option for investors who prefer to leave the stock picking to the pros. Now that you know the basics of ETFs, index funds, and mutual funds, let's see how these investment vehicles can work in the real world. Sarah's success story, from doubt to dividends. Meet Sarah, a young professional who was intimidated by the stock market. She had always heard stories of people losing their savings and was afraid to take the plunge. She always thought investing was too complicated and risky. The jargon, the charts, the constant market fluctuations, it all seemed overwhelming. But then, Sarah discovered the power of ETFs, or exchange-traded funds. She read articles, watched videos, and slowly began to understand how they worked. She started small, investing a portion of her savings every month. It wasn't much, but it was a start. She used a user-friendly app that made the process simple and straightforward. Over time, Sarah watched her investments grow. She saw the value of her portfolio increase, and it gave her a sense of accomplishment and security. She learned about different sectors and investment strategies. She read books, attended online courses, and even joined investment forums to discuss ideas with others. The more she learned, the more confident she became. She started to diversify her investments, spreading her money across different sectors to minimize risk. Today, Sarah is a savvy investor, and her portfolio is a testament to the power of consistent investing. She has a well-balanced portfolio that includes stocks, bonds, and ETFs. Sarah's story is just one example of how investing can transform your financial future. She went from being a novice to a knowledgeable investor, and her journey is an inspiration to many. Are you ready to start your own investment journey? With the right knowledge and tools, you too can go from doubt to dividends. Take the first step today and secure your financial future. Choosing your investment champion. Now that you understand the basics of ETFs, index funds, and mutual funds, it's time to choose the right investment for you. Consider your investment goals, risk tolerance, and time horizon. Do you prefer a hands-on or hands-off approach? Are you investing for retirement or a down payment on a house? There's no one-size-fits-all answer, but by understanding your personal circumstances and the different investment options available, you can make informed decisions that align with your financial aspirations. But remember, diversification is key. Let's explore why you shouldn't put all your eggs in one basket. Diversification. Don't put all your eggs in one basket. Imagine putting all your money into a single stock. What happens if that company faces unexpected challenges? Your entire investment could be at risk. That's where diversification comes in. By spreading your investments across different asset classes, sectors, and geographies, you can reduce your overall risk. Think of diversification as building a strong and stable investment portfolio. Just like a house needs a solid foundation, your portfolio needs a mix of investments to weather market fluctuations. But how do you determine the right level of risk for your investments? Let's find out. Risk versus reward. Finding your comfort zone. Investing always involves some level of risk. Generally, the higher the potential return, the higher the risk. Conversely, lower risk investments typically offer more modest returns. It's essential to find the right balance between risk and reward that aligns with your financial goals and comfort level. If you're risk-averse, you might prefer to invest in more conservative options like bonds or index funds. If you're comfortable with higher risk, you might consider growth stocks or emerging markets. Remember, investing is a marathon, not a sprint. Let's explore the power of long-term investing. The power of long-term investing. Time is your greatest ally when it comes to investing. The longer you stay invested, the more time your money has to grow. This is due to the power of compounding, where your earnings generate even more earnings over time. Think of it like a snowball rolling downhill. It starts small, but as it gathers more snow, it grows larger and larger. The same principle applies to investing. Ready to take the first step towards financial freedom? Let's get started. Getting started. Your first steps to financial freedom. Opening an investment account is easier than you might think. Many online platforms offer user-friendly interfaces and helpful resources. Once you've opened an account, you can start investing with as little as a few dollars. Remember, the key is to start small and stay consistent. Even if you can only invest a small amount each month, it will add up over time. Don't wait another moment to start building the future you deserve. Don't wait. Invest today. Investing is the key to unlocking your financial potential and achieving your dreams. By understanding the basics of ETFs, index funds, and mutual funds, you can make informed decisions that align with your financial goals. Remember to diversify your investments, find your risk comfort zone, and harness the power of long-term investing. Start small, stay consistent, and watch your wealth grow. What are you waiting for? Begin your investment journey today. And don't forget to check out our recommended videos for more tips and insights.